this is actually, I think, a crisis developing within the precious metals market. And what we see in gold, we're also seeing in silver. The story in silver is obviously different, but China, again, has been a big player in silver as one of the leading global mining nations. Not only that, but over a long period of time, they've been importing silver doré, refining it, hanging on to silver, but using their clout to keep the price suppressed. That's no longer happening. So we've got shortages developing in silver now too, as far as Western capital markets are concerned. I mean, the fact is that pricing of these things is no longer under our control. It's all gone on to Shanghai. And what we're seeing is the squeeze on the establishment, the people who are short. Not just establishment. I mean, if you look at the commitment of traders figures, you'll find that even managed funds have short positions. I mean, they're net long, but they've still got some short positions. The swaps, obviously, a big net short. The liabilities that are mounting up on the shorts are just staggering, absolutely staggering. So, yeah, it's a squeeze on the system. And I think actually, Danny, what we're looking at, if you stand back, we're looking at the dying days of the fiat currency system. And, that basically means that after a period of time, doesn't matter don't know how long it'll be, but I suspect it won't be all that long, unless governments actually manage to pin their currencies to gold, they'll become valueless. They'll go down to close to zero. I really can't see the politicians even thinking that they need to protect their currencies. They're still spendthrifts. They're still, having huge, great deficits on their budgets. They don't care. They just complain that the markets need higher interest rates. Well, it's hardly surprising. You're going to need higher interest rates still. And meanwhile, everybody in the market, in this credit bubble, assumes that inflation is going to diminish. But I mean, the thing they get wrong is it's not, sort of prices, if you like, in that sense. It's the loss of purchasing power of the currency. That's really what they've got to look out for. And if I'm right that we are in the dying days of the fiat currency system, then prices are going to soar in the next 2 years. And that is something which, of course, nobody expects. But it won't be prices going up. It'll be the value of currencies going down, their purchasing power collapsing. And of course, as soon as people realize that, they dump currency for anything they can get with it. I think that's the future. I'm very sorry to say. Well, it's not impossible. I think we have to, if you like, divide out bullion banks from others in the market, as it were. I mean, bullion banks will try and run a balanced position as much as possible. Where they're short on COMEX, they're probably long in London, sort of thing. But when you've got hedge funds, when you've got people, and maybe market makers just making a market in the swaps rather than having positions in London as well, then they could become, if you like, a systemic problem, which I think they try and cover up. They must try and cover it up. I think it's not impossible that a bullion bank will get into difficulties, but I think it's more likely it's amongst their clients that the difficulties will arise. That would be my view anyway. Well, within the COMEX rules, they can declare force majeure, but nobody's going to want to see that at all. I think what's likely to happen is there will be a rescue behind the scenes. We won't know about it. It'll be hushed up. It'll be very, very quiet, but it will happen. And it wouldn't surprise me if that happens quite soon. But, we're not to know about it, because if you get a failure in these markets, particularly gold and silver, this could undermine the whole of the derivative industry. I mean, because we're not just talking about, those derivatives. I mean, they are central to everything. Just think about the Exeter pyramid, with gold at the bottom supporting everything else. I mean, that might exaggerate the position a little bit, but you can see how important gold is in all this. And if you get a failure in what is actually legally money and all else is credit, the failure in real money, counterparties, then this is serious. You've got to bear in mind that the market has moved. It's now over in Shanghai. I mean, the physical market's over there, not over here. Yes, absolutely. I mean, it's in terms of, if you like, contagion from gold and silver derivatives. Yeah, I mean, you've got the same counterparties operating in all these markets. So you are going to get that contagion, if you like, spreading across. And it's not just those markets, because once you spread from gold and silver into other commodities, you also, going into counterparty failures in the other really large derivative markets, and even in foreign exchange and things like that. So it's got to be stopped basically, and they will stop. But as to your point about commodity prices rising and all the rest of it, I would note that gold is leading the way upwards in commodities. And my view is that it's likely to drag other commodities like base metals, for example, and energy up with it. But particularly base metals. I mean, they are, relative to gold, they are now cheaper than they have ever been. And since gold is the real money standard, as it were, even though that's being driven up, if you like, by markets, I would see that all these relationships are going to come under huge, huge strain. And it's not good for the purchasing power of paper currencies. Well, I think there's an increasing likelihood that the credit bubble will burst, come to an end. Now, if that happens, it's going to unleash, I think, some major developments in the markets. I mean, apart from anything else, something like a 1987 style crash or a 1929, October 1929, both October, incidentally. This is quite a dangerous time historically. That style, that sort of scale of move down